We're talking all things digital asset treasuries. For this panel, we've got joining us Azeem, who's a co-founder of Miden. We've got Smokey, who is the founder of Berachain, Kean, who is the head of institutional relations at Lido, and the incredible Naruto, who's going to be moderating this session, and he's a senior DevRel at Avail. Naruto, take it away.
Hello. I hope you guys can hear me. Hey guys, Azeem, Smokey, Kean. Nice to have you here. I hope we have a good panel. I have some questions for you guys, and we'll start with a small introduction. But like I have these questions where I want to understand what DATs are, what is a bull case, what is a bear case, how does the whole or everything works, and anything in between, right? So yeah, just to introduce myself, I go with Naruto and Crypto. Been here for a while, working at Avail as a DevRel. Azeem, over to you.
I am one of the co-founders of Miden, a new ZK blockchain that's in testnet right now.
Smokey, I want to hear you.
Yeah, sure thing. Smokey over here, co-founder, CEO of Berachain. Berachain is L1 powered by something called proof of liquidity, which basically means that the chain is investing its block rewards in the success of the application layer, as opposed to overpaying for security.
And Kean, please go for it.
Super. Hi everyone, my name's Kean. I've been in crypto for 9 years. Started my career in Deloitte, then I was in Consensus for around 5.5 years, mainly working on MetaMask Institutional and Fura staking and a couple of other products. And now currently I'm at Lido, where I'm head of institutional relations and I lead Lido Institutional. So really my mandate as a team is to help kind of grow adoption of stETH among institutional clients. So crypto funds, asset managers, hedge funds, really anyone who has a significant amount of ETH. And we encourage them to stake it with Lido for the added benefits of liquidity and capital efficiency.
I love all the experience here. I think I will be the one, learning a lot from you guys today. But I do generally want to open, with a very basic definition. And then we'll get into like deeper questions as well. But I've seen like so many things going on for, Lido. I've seen Berachain stat coming out. I've seen Azeem doing a lot of good work with Miden and other projects as well. So I want to understand, and like it can be framed in your own words, but I want to understand what a digital asset treasury is. And then like this is because a lot of like people that I shared link today to, they don't know what that is, or they might want to get into it, or they want to understand why this works. So just very small introduction in your own words. What do you think about that? How do they work out? How do you guys bring institutions through those, and why these are needed? So like multiple questions, but basic definitions. Smokey, you want to take up this one?
Yeah, sure, happy to. What are DATs? DATs are digital asset treasuries. We've had DATs in multiple forms in the public equities markets for quite some time. Everything like MicroStrategy, which has been around for over a decade now, for quite some time, and that I think is probably the most known and has its own set of other credit-backed instruments, etc., built around it, and is by far the best known DAT around Bitcoin. On the other hand, you have all these DATs that have come up a little bit more recently for everything from Ethereum to altcoins to Trump coin and God knows what else in the middle, including Berachain, right? What a DAT is, it's not terribly different from a crypto ETF, except the flows are primarily in one direction, and I think its purpose is a little bit different. I think the biggest thing to think about for a DAT is that it's a means for the public markets, for institutional investors, for people with simple brokerage accounts, true retail, if you will, to get exposure to cryptocurrencies. And I think that is sort of where the narrative started with. There's even been DATs, as early as I want to say around not too long after MicroStrategy. There was even one called Ether Capital trading on the Toronto Stock Exchange, where a bunch of stuff kind of started, and a little bit of the Berachain story spun out of as well. That was trading as low as 70% under their net asset value at one point in time. So TLDR is that we've seen these take a lot of different approaches over time. We've also seen them evolve a little bit more recently. DATs are crypto in a box. I don't think there's much more to say about it, but a lot of it comes down to what one can do in that box that makes a DAT more interesting than its contents alone. When we think about something like ETH or even Solana or Berachain to that point, one can think about how a DAT's value or effectively what they refer to as its MNAV, or effectively the multiple on the net asset value, can be greater than the value of the assets that are in that. So why should $100 million of crypto be valued as being worth more than $100 million on the open markets? And a lot of that comes down to what one can actually do with that capital and how it's deployed. For more recent vehicles to the tune of like ETHZilla, or some of the stuff like the Soul Sharps treasury vehicle, or in the case of Berachain, these tokens have a means of being put to work effectively, right? As in, unlike most forms of Bitcoin, they do not actually they have a yield. So what one can do with that is actually deploy those those assets across different parts of DeFi, across staking mechanisms, whatever that might be that's present on a blockchain. And of course, I'm sure Kean and the guys at Lido are quite familiar with what that could look like, to actually generate future facing cash flows and revenues for these vehicles in the public markets, which can actually be quite interesting. The way that the DATs get particularly interesting from a token point of view is that in the way that in a similar way to how MicroStrategy works, right? By trading at a premium to the net asset value, as in by the actual public markets vehicle trading at a greater value than the amount of cryptocurrency that's held within it, the DAT is able to do what's called an at-the-market offering, and effectively offer more shares to the public, and or have a PIPE, effectively a private investment into public equity that effectively issues more shares and allows that DAT to go and purchase more tokens from that given coin. So it actually ends up being a form of very levered exposure to a given asset. There's a whole bunch more that we can get into there when it comes to, I'd say, the financial engineering around DATs, around how one can build options that actually allow for more sophisticated hedging strategies, how people can use DATs that are trading at different premiums or discounts as part of larger pair trades or more structured products. But I hope that starts as a bit of a high level. It's crypto in a box. It's ideally being put to work, and that you want to trade at a premium so that you can issue more shares, use those to buy more tokens, rinse and repeat.
Okay, I think that sums up pretty well. I just want to ask Azeem and Kean before I put on a follow-up question, because how Smokey explained, this is really very simplified, and it has now I have a lot more questions for you guys. But I want to ask Kean and Azeem, is there any different pattern that you look or you have a better, not better, but like a different definition or a different viewpoint on these DATs, or we can kind of like form a consensus here?
I think pretty consensus. Like, I look at them sort of as like almost like a new way for org, like to be able to have a corporate treasury, but instead of only holding cash and bonds, like it has crypto assets, and like they can be actively managed to generate yield, support an ecosystem, diversify risk. Like they can hold tokens and stable coins, deploy capital, fund operations. And so I think that everything Smokey said, honestly, like really explained it quite well.
Kean,
Yeah,
consensus here?
100% agreed. Yeah, absolutely. Look, again, keeping things pretty simple, like not to kind of reiterate the point over and over again, but like for me, DATCOs kind of sit in between like traditional corporate treasuries and DeFi. So obviously from the DeFi perspective, it's on-chain, it's transparent, but the DATCO element kind of brings a new twist in the sense of it's being off-chain. Traditional kind of finance management is in play. So like if you look at the guys at SharpLink, Joseph Shalom coming from BlackRock at 20 years, I think that's kind of the big element that's at play as well. So the traditional management piece with digital assets.
So this is correct to say that it's a corporate balance sheet allocation, right? Yeah.
I think one thing I'd add really quickly, Naruto, sorry to interrupt, was just another thing that I think like makes stats particularly interesting from certain perspectives, just to like go home on the institutional point, right? Is that right now, a lot of folks, when they're looking at holding or custodying crypto, when we look at that at the institutional level, that isn't exactly the easiest experience. As in, if you're just a large fund, you can't just be like, man, I'm gonna go buy a bunch of like Aether today or whatever it is, or I'm gonna go buy a bunch of Pump, right? In many cases, there's a pretty long, drawn out process involving custody, involving working with a BitGo, a Fireblocks, whatever it is at the fund level. So the other thing that I think really is interesting, and something that a friend shared with me as he was launching his DAT, is that they think about it as a different means of like an exchange listing, right? As in like in the same way that some people think about your Binances and your Upbits of the world. One can very much look at this as a means of like having a different flow of capital and a different group of people able to access a given token or a form of exposure to a given token, especially if it's just something that they cannot hold on their balance sheet naked in most manners, which I'd say is most pertinent for a number of alts or things that are not Bitcoin. Sometimes, Bitcoin and ETH fall into that category. But it's actually just a spicy new exchange listing, which is a kind of cool way of looking at it too. And that again gets quite interesting when you think about the yield bearing assets. Because if a company can barely hold crypto on its balance sheet, they definitely aren't deploying it across a whole bunch of different venues as well. So it ends up being a means for them to get exposure that they just could not have otherwise, quite literally. So I figured I'd also try to make that point a little bit more explicit because I think it often goes overlooked how hard it is sometimes to buy crypto if you're not an individual user.
Yeah, I see. So I have this follow-up question for all of you here. And this is because look, the way I understand it, it's a new primitive, understandable, MicroStrategy is already there. A new dApps are launching pretty much, every not every day, but like every month, let's say. And these matter a lot for institutions because institutions can come in and then have some kind of stake where traditionally they could not have it because of their large sum of deployment of money or finances, right? So now my one question is, how does retail work here? Like, for example, if I were, like just a normal person, a college student or a professional working in tech or anywhere else, if he really wanted to buy any kind of crypto, he would just generally go on Coinbase, get that coin, or go on a DEX, right? But now that we have dApps, do you think like there will be more influx from the retail to these dApps, or would they still want to own the hard assets of any kind of crypto there is? Like for example, I'm still holding, and like Smokey, I'm a big fan of you. I'm still holding my Bera airdrop from the day one. So do you think like retail people like me or anyone else would be more interested in holding the token itself, or would they want to be holding the shares or like the equity for that?
I'll jump in real quick. I think, with the ETFs, we sort of saw that start where like, a Bitcoin ETF or ETP is just basically paying BlackRock or someone else to buy Bitcoin on your behalf. But I think what's interesting about DATs is sort of, you're not just buying the token and the token price, but there's sort of like an underlying economic engine because instead of being a retail investor buying on Coinbase, you're like, there's building and managing of a pool of assets that's going on, like providing liquidity, yield strategies, collateral for real world assets. And so you're investing in something that's being stewarded a little bit more because they're not just buying and holding the asset in that way. So I think it works a little bit differently there. Smokey, what would you say, Kean?
Yeah, I think from my perspective, it really depends on who the retail user is. So if they're quite advanced and they're knowledgeable, like sure, it's quite easy to set up a MetaMask wallet and buy on chain and then maybe stake. Whereas maybe a lot of people who would buy the DACOs or the ETFs, they may not be as advanced. And for them, their exposure to crypto is going to their brokerage and looking at ETH as a product, or again, potentially buying like a SharpLink or a BitMine. So for me, it really depends on who the institution is or who the retail user is. Because ultimately, if you're buying an ETF, you're taking away a lot of that complexity. So you don't have to manage keys, manage staking providers, manage custodians. And it's just as simple as that going through your brokerage.
Yeah, I think I'd echo Kean's words here, in that it's very different populations. And like, even the most retail of someone on CT is, I think, quite advanced compared to the majority of real people. Who are out and about in the world. Like, and when you just consider how many people have a Coinbase account or a Binance account, it's just, what I think it was Binance's account, whether it's 200 or 400 million users. And I imagine Coinbase can't be, too far off on that. That leaves a meaningful portion of the world untouched. Whereas I do think that the vast majority of people do have, brokerage accounts of some sort, and, are able to actually access things. And it ends up being that much more reachable for them if they see someone who's perhaps a known face in the way that Tom Lee kind of was, talking about something on retail channels, on your Squawk boxes, et cetera, of the world. And B, also ends up being something where they can get passive exposure, without actually having to think about it as much. which is to say, like, in many countries even, or in general, right? Like, I know in Canada that if I tried to on-ramp or tried to use like my credit card to purchase crypto, it was blocked by my bank in many cases. So but you can't exactly get blocked from your brokerage account for buying a random stock, right? So I do think that there's a lot to be said about the increased accessibility there. And I think that it's just catering to very, very different audiences that we probably don't actually think about that much.
Okay, that makes a lot more sense. Of course, I've heard about Canada. I've seen what talking about it. Smokey, yeah, you talking about it. So of course, like there are different regulations in different countries, and that kind of creates a problem. Very interesting conversation here because now it makes a lot more sense for me. If my dad wants to buy some kind of or like have an exposure for crypto, even if he doesn't understand what Ethereum is, maybe he can just go on his brokerage account and buy that. So that definitely sets a little bit of tone on like why these are needed. Um, I want to move on to a little bit more on like new teams or any kind of considerations. For example, like let's talk about Miden, Azeem. Like what are like these considerations in some of these teams where you guys like hold off launching one? And this is for like Smoke and Keen as well. Like what are these risk trade-offs that you think about when you're trying to have a debt? For example, let's say a project's mission, community incentives, any kind of long-term sustainability. So those like a lot of questions, but like what do you think about like the projects that have not yet launched that, and what are like some trade-offs or risks when you guys try to think about that in that direction? Azeem, you want to
So
go first?
yeah, I'll go first. I think it's cool on this panel that we have people on like each side of this. I had strongly considered doing a DAT and had spoken with one of Smokey's co-founders at length about how I was considering doing one pre-TGE because I thought there was a lot of potentially interesting things that we could do if we had capital available to fight shorts that would come out or potentially do some sort of M&A or something like that. And everything that I looked at sort of indicated that there was too many unknown unknowns, and that with BTC and ETH doing them, and then like sort of hype did it, and the MNAVs not really working out well, that I just thought it would put us in a difficult position from a narrative perspective, and even just from getting institutional investors to really buy in, because I know Zero G did it, and I know there was a lot of commotion around how they went about doing it. But if there's no price that's been established in the market, and then you go out and you raise 8 or 9 figure round that is supposed to in some way do price discovery when none of that price discovery has been done on the market yet. For us, it was just one of those things where I said, I would love for us to be able to do one, but at the moment there was too many ways for it to go wrong. And even if it didn't go wrong, I think that being able to sell it to investors was something that I think was going to detract from our ability to just successfully get to mainnet and TGE. And so we ultimately ended up deciding against it, though I do think looking forward, we'll absolutely explore one post TGE. I think having one of these is going to not necessarily be standard in coming years, but I do think that the better projects will find ways to be able to have them, and like to see like, Smokey and them be able to have one made total sense to me when I saw it announced.
Yeah, I think that oh, sorry, go ahead, Naruto. I didn't mean to cut you off.
Yeah, no, that's completely fine. We both have like and picture, so you don't know who's talking. But I wanted to ask, and this relates to more Smokey and Keen as well. Like, do you think how Azeem portrayed it, DATs are more suitable for mature ecosystems, or like new projects can come in, like Zero G is there, and then they came in, then there was like a lot of commotion about it. But Berachain is like matured. They have an L1. Same goes for Lido as well. So like, what do you think in that perspective as well? Like like just add your thoughts to previous question and this.
Yeah, look, I think that pre-TGE DATs are pretty wacky. I think that we haven't seen much success in that category to date, to be quite honest. And it's exactly that, right? There isn't a very good way of pricing. You can try to price off pre-markets, you can try to price off the last round, but none of them really represent the market in terms of how one acts and then how something is actually priced. So I think that really is like probably the crux of it when it comes to pre/post. I don't think a DAT is necessarily, needed for every token. I do think it's a nice to have in many cases, and it almost depends on what degree of institutional lien the token has in the first place. Because I really do think of a DAT, if used effectively, as closer to a capital markets arm of like, an ecosystem or a foundation in a sense, in that it is, publicly traded, NASDAQ listed company, NYSE, whatever it might be, that is in the business of helping to accrue value to that token as well, right? So I do think that there's a lot more leeway that can exist from like the structuring / engineering partnership, whatever it is side, that is not purely available within the foundation / labs type models. And I do believe that there's definitely some upside there. I think that the other side is that it doesn't like, so I don't think it has to be mature, but I do think it should be post-launch. The other reason, just sort of going back to your original question, Naruto, is like in many cases it's not that easy for people to pull off DATs right now. As in there was a point at which, was sort of, peak hype. And even for us, we were originally looking at a higher offering, or like a larger size, and then the whole market blew up on 1010. We heard of a number of our colleagues that are working on DATs basically going, pencils down and saying, hey, look, like we just don't think this is going to get across the line, and we're not going to try to drag it across the line in this middling manner. But the fact is, I don't think a lot of folks have been able to, what's the right word? I don't think a lot of folks have been able to effectively go from playing in the crypto markets to playing in the public markets, because I really do think it takes a very different skill set, and you're catering to a very different audience that thinks very differently from like the schizos that we are attuned to on a daily basis over here. And you're thinking about retail micro cap / mid cap investors, which are like pretty far off from it. So I think that one of the other things really is like a company's proximity to or ability to assemble a team that actually understands how to navigate the public markets. For us, we were pretty lucky that we had a number of folks who were pretty close to the firm, who spent quite a bit of time over there. So, for example, the chairman of the board for Berachain's DAT, called Greenlane, is a dude named Bruce Linton, who previously basically built the cannabis industry and took a company called Canopy Growth to a $20 billion market cap. And it ended up being a very interesting set of constructive overlaps there, because another one of the board directors has built and sold a large company in the cannabis space, which he actually sold to Bruce, and Bruce, the chairman of the board, had actually looked at acquiring the company Greenlane, that ended up becoming the operating company for the Berachain DAT. So it was one of those things where you actually ended up having a lot of confluence of like the ideal factors that made it a good company for Berachain DAT, and a group of people around it who actually know how to accrue value to a public markets vehicle, right? So I think that that's also something that goes undersaid, because like drop shipping a bunch of random crypto people to market a public equity does not work that well. And I think we've seen that in the case of like some of the other DATs that have very, very crypto heavy boards, but like no bid either, right? So I think the whole sector still needs a lot of work and still needs a lot of maturity, including our vehicle, among many others. But I think that a lot of it's actually figuring out who you're marketing to, and how you can actually, fit well for that.
Makes sense. Everything comes down to how you wanna put a DAT together, and then who you wanna, involve in the process and what the audience would look like. Kean, what are your thoughts? Because I really love what Lido has been doing. Very interesting work. I read about it yesterday. So what are your thoughts here? How do you think Lido kind of, tackles all these issues, and looking at like the mature ecosystem that Lido has? What do you think about that?
Yeah, it's obviously a really interesting time, obviously, like with the big Ethereum DATCos. I think obviously, I think a big birth for these DATCos was to solve a problem, because at the time ETFs didn't have staking, whereas these DATCos could effectively offer a staking strategy through traditional brokerages. Obviously now things are starting to pivot, and there seems to be we're approaching at least consensus where staking will hopefully get approved, and it will be added to ETFs, which will obviously make them more efficient. And I think it will be interesting to see what happens. Like, will a lot of the capital stay with DATCos? Will it potentially flow to ETFs? Because ultimately, I think if you just take BlackRock as an example, Ether, their ETF, if that gets staking added, will that cannibalize what's happened or what has happened with the DATCos? So like, will the narrative change? And I think for me, for these DATCOs to stay competitive, they obviously need to be able to generate higher returns. So they need to have a more aggressive staking strategy or a DeFi strategy that generates those higher returns. From my perspective with Lido, we obviously speak to quite a lot of these DATCOs and ETF staking companies. So like you mentioned, the big selling point is with VanEck. So VanEck filed their S1 filing for an Ethereum or Lido staked ETH ETF. And the whole selling point there is liquidity, being able to offer 100% stake product. So again, from a DATCO perspective, when we speak to them, we're able to effectively say, look, you can stake more ETH, you can use stETH as collateral, deploy it into DeFi, generate higher returns. And again, to kind of maybe close the topic, I think that's where the DATCOs need to kind of operate. They need to be more competitive from a yield generating perspective compared to, say, staked ETH ETFs.
Interesting. Okay. So now, okay, I think we have good 13 minutes or so, I think. And we're also running late. So I have only two questions. One is going to be really spicy, and one is going to be like, I want to understand what's the structure or the framework for that. So the first question, which is a very normal one, is can you tell me if there is a mature framework for launching a DAT or not? I was talking to a few friends, and this is a personal experience, I was talking to friends who were also involved. Maybe they're not as involved as you guys, but they said that a lot of these DATs coming out, some of them at least, they do not have a good framework, or they might go bust, or not bust, but just like not have a good returns. What do you think about that? Like, there are like a lot of companies that are like just haphazardly going on and like launching because for the sake of launching, or maybe they're not thought it through. So I want to know your thoughts, Kean. First, please go for it, and then
Sure.
Azeem and Smokey. I want to know the framework, and if it's good or bad, what does a mature framework look like to you?
Yeah, like from my perspective, like I again, it's obviously ultimate decision is with the DAO. If like Lido was to ever do a DATCO, like I think, again, personally speaking, like that's not really a strategy that makes sense for us. I think the strategy for Lido should be getting stETH used in these DATCOs. So again, making them more efficient, liquidity, using stETH as collateral. That's a much easier selling point. But like I said, the DAO will ultimately decide if we decide to go down a DATCO route. For me, I think a lot of the DATCOs, like there's going to be a handful of winners, to be honest. You might have 4 or 5 that will probably consume the market. Like potentially you could kind of see it like the ICO summer or the ICO boom, where everyone and their mother will try and do a DATCO. But it's obviously quite different compared to, say, ICOs of the past. When you do a DATCO and you're a public company, there's a significant amount of regulatory lift and financial costs associated with it. So I don't think we'll get to that same level of kind of potential explosion from DATCOs, because again, they're heavily regulated and they're public companies. But it does feel like everyone and their mother is trying to launch a DATCO because they feel the opportunity is right. But to my earlier point, like I really think there could be some issues or greater opportunity once staking gets added to ETFs, because again, they're just so cheap and easy to invest in. The DATCOs are going to have to build a narrative. Like I said, will it be based on like the management team being so good at what they do, generating higher returns, or will it be them deploying capital into DeFi? So it'll be really interesting to see what happens over the next 3 months, what that narrative shapes out to be.
Okay, understandable. Azeem, what do you think about this? Because Lido is very mature and they're very much targeted towards, let's say, staking ETH and similar operations. What are your thoughts?
I think most of them are going to blow up. I think Kean said it very nicely that there's going to be a few winners, but I think there was a huge frenzy. Greed always wins, and everyone went to figure out how to launch one. And it's why I was so hesitant as we were going about it. And we spoke to a lot of amazing folks who, some of which were like, yeah, we can push this forward if you want to. But I just didn't want to be one of the ones that felt like we were more in a position to blow up. And so for us, it was a decision to go against it. I think most of them will blow up. And the opinion that I sort of generated after having enough conversations, because I've been deciding between like, do we do a SPAC or do we do a DAT, is I don't think it's been done to date, but I'm really curious to see sort of like a D-SPAC to sort of happen in the future, where like the main differentiator in the simplest of terms to me for like a SPAC would be like, hey, I'm raising $200 million to do stuff in space, and we have this great team that's good at doing stuff in like space. Give us money. Here's our sort of thesis. Here's our team. Let's get some like large capital inflows, and we'll like invest that. And then the DAT works a little differently, as we've been discussing. And so I'm waiting to see sort of the evolution of DATs over the next year. I'm hoping that we'll be able to see something along the lines of this sort of de-SPAC idea. But in the meantime, I think we're going to see most of them really blow up, and then probably like 3 to 5 of them be successful and sort of carry over. But I do agree with Kean that once ETFs are able to start do staking, and if there's just not enough retail or institutional flows, how that moves the capital around from where the DATs are now.
Very, very interesting. Actually, I kind of like resonate some of your thoughts. Smokey, do you want to take this one real quick?
Yeah. My take is not too far off. I agree that with what Azeem said. I think we're going to see consolidation. I think we're going to see DAT roll-ups as well. As in, I think we're going to see some go and like just use their cash reserves to go and buy other ones that are trading under MNAV, etc. Because it can be strictly a creative trade, to be honest. It's just a matter of not blowing up either stock and then turning it into enough of an issue paperwork-wise. But I think that's quite fascinating, and something that we've even debated internally at times. I think that we'll actually see DATs looking a lot more like on-chain hedge funds in terms of like their ability to deploy into different assets. Or when I say different assets, I should say different strategies. I personally think, and I say this from the perspective of a token, right? But I think that they are more, useful than ETFs in that they're permanent capital vehicles if done right. Whereas ETFs have inflows and a lot of outflows. And as as someone with a token in mind, I prefer when it's not flowing out and being sold. But that being said, I think that again it has to be sustainable, and that there are certain points where it's just like egregious, and you do get unwinds. That being said, like we've seen one of the first examples of a DAT like selling tokens in the case of like Eatzilla a couple days ago. I don't think that was well received by the market at all. So I think that like people are sort of like looking at DATs and ETFs as two different things for a pretty fair reason. As in the DAT's just supposed to black hole a bunch of stuff, right? It's I remember when I was trying to explain it to a couple of like more DeFi native friends, I was like, DATs are not the most far off from Ohm forks in a way. So kind of got to give Ohm like some credit for that in a sense too, which is of course evolved quite a bit over time. But you're putting an asset in there, you're getting other shares out. That's kind of like how an ATM offering works in some cases. Of course, there's much more nuance. It's much more volume based, et cetera, et cetera. But the DAT is theoretically a black hole for your tokens, right? So if managed correctly, that can be a very effective tool. But of course, that's subject to a lot of markets, and it means that you have to do things. It means that you have 2 charts to worry about, which can be 4 times as fun.
Yep, understandable. I think this is like we are almost on time, and then this will be my last question because this is what I wanted to build the whole conversation towards. We understood everything here. Pretty great conversation. I want to know, what is the bear case for DATs? Like, what if the Flywheel stop working? What if the premiums that are coming, they start evaporating, or like just getting minimized? What if the capital market shut? What are your thoughts on that? Like, do you think then that becomes, or like a lot of that just go bust? And how does it work? And I'm sorry, like after this you can like add some kind of closing statement as well. But I want to like really get into this one because I genuinely feel like it might end up as a domino effect for other DATs as well. King, you want to go first?
Sure, I can give my 2 cents. So yeah, if a DATCO fails, I think, like you said, this domino effect could really start. It could also be what kind of starts the consolidation in the market, like Azeem said. I think it's pretty likely there's going to be a handful of winners, and once the first domino falls, this is an opportunity for the big boys like SharpLink and others to come along and start hoovering up a huge amount of ETH, maybe at a discount, or even just an opportunity to bring on other talented people from other DATCOs and bring them in-house. So again, giving them an opportunity to generate higher returns, depending on their strategy, of course. But yeah, like I think there is a lot of risk if one of the DATCOs fail. And yeah, the domino effect could start, and it could have wider impacts for crypto as we know it.
I'll go spicier
Azeem,
and
please
say,
go for it. Yep.
I would like just summarize it and say it as little as like, you probably won't have to wait too long to see it play out, because I definitely think it's going to happen. I think there's no way that it doesn't happen. The greed in the markets that caused so much of this to come about, it will happen. And so you'll get a chance to, like, in full view, watch the destruction of many DATs and the consolidation occur.
Yeah, my take is that it'll be slower than people think, because there's a lot of stuff to unwind at the corporate governance level, and the public markets are not too friendly to just like kind of eating stuff. But I do think at the same time, when people think about what would cause, FTX level outcomes or like Luna level outcomes in the space, I mean, we saw what happened when in one day like 19 billion got liquidated, for reasons that we still don't fully understand. I think that one can only imagine what happens if you get a bunch of these stats that start, dominoing as noted, right? As in, I don't think the structural risk in DeFi right now is like, the Athenas of the world. I think the structural risk in crypto is more likely a couple of these guys, blowing up in a pretty extravagant manner.
For sure. Okay, understood. I wish I had asked this question a little bit earlier so that I could follow up with, put Azeem against Smokey versus Kean. Like that could have been a very nice conversation. I really love those thoughts. I know Smokey is very much optimistic. Have had great conversations with him, similar with Azeem and Azeem as well. But yeah, that's all about it. Thanks a lot for being here, and thanks for letting someone like me, moderate you guys. Mashal, please take over.